I've got about 25 grand riding on one stock right now. And no, it's not some AI penny stock, it's not crypto, and it's definitely not a safe play everyone agrees on. It's Meta. My average entry is around $628, and I genuinely think this stock has a clear path back to 850 by the end of 2026, and that's roughly a 35% upside from here. So while we're running around on Call of Duty in the background, I'm going to break down why I'm still holding, what would make me sell, and whether Meta is actually still a buy right now, or if I've completely lost the plot. So if you're new here, this channel is basically where I talk about money, investing and the stock market, while you've got some nostalgic gameplay on in the background. It's usually Call of Duty or FIFA, because staring at charts for 5 minutes straight is a bit dead. I am not here to sell you hype or pretend I can predict the future perfectly. I just share how I'm actually investing my own money, what's working, what's not, and how I think about risk. In this video, I want to walk through why I bought Meta, why I've continued to hold it at this level, and what would need to change for me to either buy more or get out completely. This isn't financial advice, it's just my thinking, my numbers, my conviction, so you can decide whether Meta deserves a place in your portfolio or not. The first reason I'm so confident holding Meta is simple. The business absolutely prints cash. Strip away all the noise, headlines and sentiment, and Meta is still one of the most profitable advertising machines ever built. Facebook, Instagram, WhatsApp combined sit at the center of how billions of people communicate, scroll, consume content every single day. Advertisers don't care about vibes, they care about return on ad spend, and Meta still delivers some of the best targeting, data, and conversion rates in the entire industry. That's why, even after Apple's privacy changes, even after TikTok competition, even after all the Facebook is dead takes, advertisers came back because the platform works. Meta generates tens of billions in free cash flow. That's real money, not adjusted for EBITDA nonsense, and management has finally flipped from reckless spending to discipline. We've seen massive cost cuts, headcount reductions, a renewed focus on efficiency, and aggressive share buybacks. This isn't the Meta of 2021 lighting money away on fire anymore. This is the business that's realised the market will punish waste, and they've adapted. When you combine strong margins, massive scale, recurring ad revenue, you get a company that can survive downturns and still compound long term. That alone justifies a much higher valuation than people are willing to admit. Now let's talk about why the stock pulled back, because this is where I think the market got it wrong. One of the big reasons Meta sold off recently was due to a one-time tax-related charge that smashed reported earnings. Headlines went wild, sentiment flipped, and suddenly people started acting like Meta's fundamentals had changed overnight. But here's the key thing, they hadn't. This wasn't a collapse in user, a breakdown in advertising demand, a structural issue with the business. It was largely an accounting and tax timing issue. Markets are emotional in the short term, algorithms see earnings miss and hit the sell button without context. Retail investors panic, Twitter narratives take over, but long-term investors should be asking, does this change Meta's ability to generate cash over the next 5 to 10 years? And the answer is pretty clearly no. In fact, if anything, this type of sell-off creates opportunity, because when a stock drops for non-fundamental reasons, valuation compresses while the business stays intact. That's the exact scenario you want as an investor. I don't buy stocks hoping for perfect quarters, I buy them when the market temporarily loses patience, and that's exactly what's happened here. The third reason, and probably the most important, is that Meta still has a huge long-term optionality that the market refuses to price in properly. Everyone talks about AI like it's only Nvidia and Microsoft, but Meta is quietly integrating AI everywhere. Ad targeting, content recommendations, Reels optimization, creator monetization. Better AI doesn't just mean cooler features, it means more effective ads, which means advertisers pay more, which flows straight into Meta's bottom line. Then you've got WhatsApp. People massively underestimate this asset. It's barely monetized in many regions, yet it has an insane daily engagement. Payments, business, messaging, subscriptions, there are so many levels still untouched. And yes, there's the metaverse stuff, which people love to mock. But here's the thing, Meta can afford to experiment. They don't need it to work tomorrow. Even partial success over a decade is upside that's currently priced at basically zero. So when I look at Meta and I model a return to around $850 by the end of 2026, I'm not assuming anything crazy. That's roughly a 35% gain from my average entry, not including any buyback, impact or compounding along the way. That return comes from earnings growth, margin expansion, better capital allocation, and the market eventually calming down. Not hypes, not memes, just fundamentals catching up. This is important. I'm not blindly married to the stock. I'm holding Meta as long as cash flow stays strong, ad demand remains resilient, management stays disciplined. If that changes, I reassess. But right now, the risk to reward still looks skewed in favour of upside. That's why I'm comfortable having a meaningful position here and letting time do the heavy lifting. Quick side note, because I get asked this a lot, I hold this Meta position across trading 2-on-2 and IG, and I actually use IG quite heavily for longer term investing and holding cash. One thing worth mentioning is that IG currently offers up to 7.5% interest on uninvested cash, which is pretty mad when you compare it to what most banks are paying right now, especially in the UK. So if you're sitting on cash waiting for opportunities, at least make sure it's earning something while you wait. They've also got a referral offer where you can sign up and get a free stock, which I'll leave linked below. Full transparency, it's an affiliate link. I benefit if you sign up, but it's also genuinely one of the platforms I already use. As always, do your own research and only invest what you are comfortable with, but it's worth being aware of what's out there. If you found this useful, make sure you like the video. It genuinely helps push this out to more people who are trying to get better with money. And if you want more videos like this, real stock breakdowns, investing psychology and portfolio updates, all while we run some nostalgic gameplay in the background, hit subscribe. I'm posting consistently and documenting this stuff as I go. Let me know in the comments as well, are you bullish or bearish on Meta from here? And if you are holding it, what price would actually make you sell? I read the comments and I'll probably cover some of your takes in a future video.